What just happened in the markets? Chaos, corrections, confusion. But let me be clear. Those last few months that we've had resoundingly proved 5 of our core wealth growing principles we've stood by even when others have doubted. Want to know what they are? Let's break it down. First, stop chasing unicorns. We told our clients, stay diversified. And that's what we did in our discretionary accounts, period. When the hype was sky high and everybody was piling into the next big thing, in this case, the Magnificent Seven stocks, we said, no thanks. We owned them, but we didn't overweight them. We didn't cave to the fear of missing out. But here's the thing. Discipline 1, again, remind some of your friends that need a money manager or need a financial advisor that your guys are doing it the right way. So, number 2, rebalancing. It feels wrong, but it's exactly right. Selling your top performers to buy what's lagging, it's not natural, but it's exactly the right thing to do. And when only a handful of stocks were doing all the heavy lifting in the last 2 years, we leaned in, trimmed our exposure at the end of last year. Why? Because buying low and selling high is still undefeated. And yes, one of our principles is we don't like to sell, but we will sell when things become too heavy in the portfolio and there's other things to buy. So yes, there were some tax gains last year, but again, buying low and selling high is undefeated, and we're glad we did because the stocks that we trimmed last year are the ones that let us down this year so far. Third, we warned the market was priced for perfection, and perfection is fragile. Inflation was still sticky, and then who the hell knew what the tariffs were and how they're going to react and how the markets are going to react and how companies are going to react. They're unpredictable. The tariffs were unpredictable. And as we could see this morning, the world did not expect as bad of an announcement as we got yesterday from the president. So we told you those risks weren't priced in. And guess what? We got a correction. It was the fastest 10% drop in years. The Magnificent Seven, like NVIDIA and Microsoft, they are now deep in bear market territory. And you can't say we didn't see it coming. I didn't know when it was going to come, but it was obvious. There's certain principles that exist, and that's what happens. Fourth, number 4, we reminded everyone that an average 15% drop each year, it's not a bug. It's a feature. It's something we need to expect. It's the price of admission for stocks' long-term premium returns. So long-term investors like us, we expect volatility and turbulence, and we anticipate it, and we welcome it because that's when we make the most money, when we can buy low. So we don't flinch. And because timing the market is a fantasy, owning great companies throughout the storms, that's reality, and that's what we do. I'll say it again. We've owned AutoZone and Roper for 20 years without selling. Those are great companies, and we've owned them for different reasons, but mostly because of their operating systems. And finally, this is the big one. Nobody knows what's going to happen in the future. Nobody, not the media, not Jim Cramer, not the Fed, not even us. I don't know. And that's our superpower. The fact that we know that we can't know. Why? Because when chaos hits, most people panic, but not us, not our clients. We fall back on our plan. It's built for the uncertainty that's built in, a plan that's always worked long term. So I just want to remind everybody in this morning of chaos, we're going to have some. We could very well enter a bear market, which is a 20% correction from the highs. This morning, when we open, we will be below a 10% correction again, but right around, maybe around the 15% mark. But remember, that happens every year, at least once, a 15% correction. Then every 5 years, that 15% correction turns into a 20 to 30% correction, which is a bear market. So don't be surprised. Remember, This is unprecedented. It's always unprecedented, these things. Remember, economics lasts longer than politics. And remember that we own companies that are going to be able to manage through anything and have always done it. That's why we own them. So let's rely on our managers. Let's buy more of it when they go down, and let's weather the storm together. So this is our victory lap right now. And we didn't flinch. We didn't chase, and we stayed the course. So what's the lesson? Market storms come and go. We've had a once in 100-year pandemic. We survived that and made a lot of money coming out of that. We survived 50% bear markets in the last 25 years, the dot-com crash and the great financial crisis, and here we are, near all-time highs. So what's the lesson? Storms come and go, but the principles that we build wealth on for the long term, they don't change. So stick with the plan, folks, and give me a call if you need some reassurance, or if you need some help in getting your cash together to invest in this downturn. But stay strong, stay calm, and I got this as far as your volatility goes. Don't worry about it. But if you need me to walk you through some of it, I'm happy to talk to you. Have a nice day. Don't listen to the news. Nobody knows what's happening. Thank you.